the economy has changed, and the way you think about it, the economy can still operate. One of the things we've seen in sort of this phase one, or hopefully only we don't get a significant reverberation in terms of Corona, but the parts of the economy are still operating really well. And you look at the virtual part of the economy, and look at obviously what's happening with retail sales online, what's happening with it, to see things like the trucking side, et cetera. But clearly, what is going to happen, you are going to stretch out a lot of the development, whether it's travel, whether it's hotel, whether it's leisure, et cetera. Restaurants, while reopening, you clearly are going to slow that down. The equity market has been reacting to that, and I think rightly so. But the interesting thing about investing in markets today, you have the playbook because we watched it play out for the last 2 or 3 months. So the markets are more comfortable with. I've seen what happens. I've seen what really slows, and the places where the economy operates are actually doing pretty well in the markets.
So that sounds like you agree with Ryan that you wouldn't necessarily wait for a dip to buy?
So I actually heard that interview. I agree with a lot of what he said. So listen, we were hoping, in fact, this week we got a bit of a pullback, and so we added some stuff. The liquidity coursing its way through the system is just extraordinary. And Becky, one of the metrics I use that's actually pretty powerful is I look at not just where interest rates are today, but where forward interest rates are. And if you actually take where free cash flow is in the equity market relative to forward interest rates, the equity market is not high. From a PE ratio, it's not that attractive. We'd love to get some pullbacks, and we use the options market to try and get some convexity into our portfolio, some upside in the portfolio, which has worked really well. But yeah, when we get dips, we try and buy, and particularly in names where we get dips in some of the names, we try and buy some stuff. And the hard thing is I manage a lot of fixed income assets. Much of the fixed income market is uninvestable today because the Fed has taken it out. So if you have to generate return in your portfolios, which is what our clients want, you've got to be more in equities.